Welcome back, everyone. My top 15 high growth dividend stock list is off to a great start this year. For the month of January, the 15 chosen stocks posted a very nice gain of 9.44%. This was much better than the return of the S&P 500. SPY, the S&P 500 ETF, started the year with a gain of 6.29%, coming in a little more than 3% behind my list. And VIG, the Vanguard Dividend Appreciation ETF, returned only 2.9%, which was 6.54% lower than my top 15 list. I've been tracking and sharing this list for 29 months now, and it is entering its fourth calendar year. It started off with a modest loss for partial 2020, posting a gain of only 6.29% for the last 4 months of the year. VIG returned 9.09% during the same period of time, and SPY also bested my list with a gain of 7.94%. But in 2021, my top 15 list started generating alpha. It finished the year with a return of 33.81%. Compared to a return of 23.75% for VIG and 28.76% for SPY. 2022, albeit a down year, also saw my list outperform both benchmarks. The list posted a loss of 8.58% on the year, while VIG fell 9.8% and SPY fell 18.16%. Since inception, my watchlist has a 15.71% annualized rate of return, that is 5.92% better than VIG, and 7.54% better than SPY. I think this proves that there is at least some merit to this stock selection process, and the list can generate good long-term investment ideas. The focus of this list is on adding growth to a dividend strategy, and I seek to identify which dividend growth stocks present the best combination of quality and value during each month. Not all of the presented stocks have been winners, but collectively the list is performing well, as you just saw in the performance recap. Let me first go over the top 15 high-growth dividend stocks this process identified for February. Then I'll summarize the results from January, and we can dive into the buy and hold strategies to wrap things up. The chosen stocks for this month all appear to be undervalued based on dividend yield theory. They offer a rather low average dividend yield of just 1.33%, but have a very healthy 5-year dividend growth streak of 28.64%. The dividend growth rate is slightly inflated by one of the chosen stocks that had a few above average dividend increases recently. The chosen stocks are SS&C Technologies, Cigna, Domino's Pizza, Zoetis, Lowe's, Tractor Supply, FMC Corporation, Sherwin-Williams, Market Access Holdings, Charles Schwab, MasterCard, CDW, Skyworks Solutions, Visa, and Rollins. Only 2 of these 15 stocks offered a dividend yield higher than 2% as of the end of last month. They were Lowe's and Skyworks Solutions. But remember, the objective of this list is not to find a high-yield dividend stock. Instead, the focus is on finding a quality company with a good history of growth that has the potential to continue growing at an above-average rate in the future. Each of these stocks currently offers a premium dividend yield when compared to its trailing dividend yield from the last 5 years. They also all have double-digit dividend growth rates during the last 5 years, and my expected rate of return for each stock is at least 12% per year going forward. This return estimate is based on the current dividend yield, projected earnings growth, and a return to fair value based on dividend yield theory. The return estimates range from a low of 12.08% for Sherwin-Williams to a high of 21.9% for Cigna. While I don't expect these return estimates to be overly accurate, I do count on stocks with higher estimates to offer better returns than stocks with lower estimates. Let's take a look at the top 15 list from January and how it performed last month. Collectively, the 15 chosen stocks rocked a cool 9.44% return. 12 of the chosen stocks saw gains that were higher than VIG. The best returns came from Monolithic Power Systems and Skyworks Solutions, both above 20%. SS&C Technologies finished the month up 15.92%. MSCI was up 14.27%. Ball Corporation was up 13.88%. Visa and Best Buy were up more than 10%. CDW came up just short of double digits, finishing with a gain of 9.77%. Texas Instruments was up 8.03%. MasterCard was up 6.74%. FMC Corporation was up 6.67%. And Lowe's was up 5.05%. This leaves us with 3 stocks that came up short of VIG last month. Domino's Pizza posted a gain of just 1.91%. Tractor Supply had an even weaker gain of 1.34%. And Cigna was the only chosen stock to post a loss, dropping 4.43%. All in all, a very strong month that pushed the watchlist further ahead of VIG and SPY. Given that buying and selling up to 15 stocks each month is not a practical strategy to adopt, I have also tracked how a buy and hold strategy using this top 15 list would be working out. I started such a portfolio in 2021, another in 2022, and a third one for 2023. All 3 portfolios are beating both VIG and SPY after January. The premise for these portfolios is simple. Invest an equal amount of money into all 15 chosen stocks each month. Never sell these positions, and reinvest all dividends back into the portfolio. The portfolio that was started in 2021 had a decent return in January of 4.96%. This was better than VIG, but came up short of SPY. Since inception, this portfolio has an annualized return of 10.2%, compared to just 6.88% for VIG and 5.59% for SPY. The portfolio that was started in 2022 had a more impressive run in January, posting a gain of 7.06% and beating both benchmarks. Since inception, this portfolio has an annualized return of minus 5.76%, compared to a loss of 7.18% for VIG and a loss of 13.01% for SPY. 2022 was a tough year to start a portfolio, as most stocks outside the energy sector struggled to generate positive returns. The portfolio started in 2023 is off to a great start, posting a gain of 9.44% last month, compared to 2.9% for VIG and 6.29% for SPY. 2023 is thus far a better year than last year, but we continue to see large swings in the market. Volatility equals opportunity, so I remain optimistic that we will continue to be able to find value this year. A total of 66 unique dividend stocks have appeared on this list over the last 29 months. The best long-term performers have been ADP, that is up more than 70%, Tractor Supply up more than 65%, Progressive up more than 59%, Bank of New York Mellon up more than 53%, and United Health Group also up more than 53%. Out of all 66 dividend growth stocks that have crossed the top 15 list, 50 have positive total returns since their first appearance. This means that 16 are sitting in the red since first joining. The average total return for all 66 stocks is 16.4%, with the average duration on the top 15 list being 23 months. I think these are pretty good metrics. I personally own many of the stocks that have appeared here. I already have a position in 12 of the chosen stocks for February, and I will be adding to several of these stocks during the month. This list is generated purely based on quantitative historical data, and I always perform additional due diligence on any stock before I decide to invest. I would urge that you do the same, and use this list simply to generate ideas like I do. I track the long-term performance and the buy and hold strategies just to measure how effective the stock selection process is. That's it for today. Thank you for watching and see you next time.